All right, good morning, everybody. Another Friday is upon us here. It is February 4th, 2022, and we might as well go ahead and get started with what we do every morning here. Just to quickly review yesterday, I do want to actually bring up the daily really quickly here. If you guys remember, we were talking about off the highs right into our expected area of resistance right here around what was it, 45.72 to 45.80, 80.50. That was our expected area of resistance. We're pulling back, and we talked about this bearish divergence that we had off of the highs. So back, we were basically here seeing this, and then we had the new candle kind of forming yesterday morning. We talked about the bearish divergence on the daily. We talked about the confirmation of that bearish divergence on the 4 hour as well up top there. And so we didn't want to say we were expecting a pullback, but we said if that happened, we had to be aware that the pullback, we were looking at some levels that we had below us. And let's just zoom back out. Essentially, we had two fibs going on here, and I want to show you something kind of interesting before we jump into this morning's forecast. And that is yesterday. I told you there's two fib legs that we're looking at. We've got the entire push from the low at 42.1275 all the way to the high we made just a few days ago. That high again, where we had the bearish divergence on the daily, the 4 hour, the 1 hour here, and all the short time frames. If you draw a fib across that entire range, the 38% retracement, remember we said, was basically that swing high from the previous week down there at 46.25. Now the actual number, I don't know if I drew this perfectly to the tick at the top, perfectly to the tick at the bottom, but essentially it's saying the 38 retracement is at 44.43. And we've come down, and essentially we tested 44.45.50. Our eye level came down, I believe, just exactly 2 points below it, and tried to bounce up off top. Actually, let's take a look here on the short time frames. We came down to 44.45.50. We went ahead and just a little probe right below it. Came up actually right to the back end of our other eye level here. I actually shorted this right around 5:30 this morning and wrote it down right to this expected area of support right here. So I got short right on that triple top at 59 and wrote it all the way down to 51 with two contracts and closed it out for a little scalp. Anyway, we held the eye level. Now we pull back, and interestingly enough, we're bouncing right off the CP. And this pattern right here, this major eye level and a CP 2 or 3 4 points below it, we saw this happen. It's kind of funny. There's probably no edge to this or anything. It's just funny that for a few days now, we've had lows where we come down, we hit the eye level, and there's a CP specifically, just a few points below it, and it does exactly this. Comes down and then hits the prediction point pretty much to the tick and gets a bounce. Just kind of fun to watch. It just blows me away how well these levels work. Anyway, back to the 60-minute. We said we have these retracement schemes. We've got the entire push up from the low of the previous week all the way to our high. And then I told you there's this other leg in here that's kind of like right where we launched out from. So we have, the whole thing. But I think that this leg right here from the low, the major low after, the push, was also a relevant level or a relevant fib leg to watch. Now look what happened. What was the low of yesterday? The low of yesterday was 44.62, and the 38% retracement of the local major push right here is 63.63. All right, so we basically came down and bounced directly off of the 38% retracement of the local leg that I told you I think was still going to be relevant, even though the levels weren't necessarily lining up beautifully. And I actually said this specifically. The 38% retracement is, let me get my ellipse here, right sitting up next to that swing low right there where we ripped out of and then never came back and started pushing. So I said that when we pull back, because we have the 38 lining up right there, very well could hold, although I was looking at the bigger fib and looking at that 40, where are we? That 38% retracement of the bigger leg, lining up with that major previous weekly resistance up there at 46.25. So I like the bigger fib, but I did tell you and specifically said we had that swing low lining up right with the 38 of the smaller leg, and we could find something. And look what happened again, right into it, broke it by maybe a point, and got this really strong push out of the yesterday. Now yesterday, I want you to take a look at this, and we'll go down to our 10 minute now, just so we can see a little bit more detail. Bounce again right off of that level, came up, and look at where we found resistance in the overnight session. First of all, we couldn't get through our first eye level here, and basically tried breaking through multiple times, couldn't get through it, and pulled all the way back, right? We got a decent retracement of that leg. So if we look at this low up to this high, it got just in front of the 38 and front ran it and bounced. And interestingly enough, came up. Where did we find resistance? Directly off the eye level, and then it pulled back, it bounced off the other eye level, retested it. There's our peak above and fail, right? Pushed up just a few ticks higher. RVI was flat, or actually came down a tick or two lower, and we had a bearish divergence at an eye level in the overnight session here, just around midnight Pacific, and then failed. And now we came down, we bounced right off eye level 74.50 for almost a 10-point bounce, and actually held that for 20-30 minutes. Broke through, came down, held our eye level down here for a little bit, and then it just got messy and came down. We held 45.50. Remember 45.50 zooming back, that is that 46.25 swing high. So back to last week, the major high of last week was 46.25 right there. And right now, here's the low we just made, right? 43. Came into it, bounced out, right up into the back of our next eye level. That's where I shorted this morning. Remember, right over here on the short time frames off that eye level. So there's the bounce from 45. Remember, 46.25 was that major swing high from last week. So we came down, probed right into it. We actually bounced right off of it. Came down, probed below it, came back up, pulled back to it, and then bounced out. And then this is where I got my short off and got the pullback, and again took my profit right where I expected there to be a bounce right here. Anyway, let's go back to the 10 minute here. And where did I put my 10-minute chart? So going back to the 10 minute, I keep going on these digressions, but I just think this stuff is very important to be aware of. And then we came down and we held the CP. So just like I said earlier, we came into an eye level, got a good 10-15 point reaction from there, or whatever, 10-12 points, and then pulled back and peaked a little bit lower right into a prediction point and held that almost to the tick. And now we're getting a nice, beautiful bullish divergence down here, and a nice reaction off the CP. So let's now kind of look at today, and what we can expect coming into this morning and what levels we want to focus on. So I am going to do a quick sweep through the higher time frames. We're at the end of the week here. Again, we're holding 50% of the previous year. Our quarterly still kind of looking funky. We are still below 50% of our 3-month bar. Our monthly, we're still below 50% of the previous monthly bar, and well below 50% of the bar before that. So, and again, the monthly has the bearish divergence at the top that we've been monitoring and paying attention to for a few weeks. And sure enough, looking pretty bearish now. And then our weekly, we said, has the first clue of a potential turnaround here for that bullish recovery back to the highs. So really nice, and we even saw this back on Monday. We said it looked like a potential reversal, and all week we have attempted to push, and then we failed right at our failure level. So let's go down and take a look at that. We said first failure level probably around 45.20 to 45.10, and sure enough, we did push in, fail. You can't see it on a daily perspective. The bar doesn't show enough detail, but we did come right into there and fail and get whatever it was. I don't remember, 15, 20, 30, 40, 50 point pullback. And then we came up and came right to the next area. Again, you guys are probably tired of hearing this, but right into the 61.8, that previous swing low in price, and failed again right where we expected. It might have pushed a few points beyond what I wanted to hold, but essentially held that area. And there's that pullback. And so I think so the weekly, you can see we attempted to push, but then we couldn't get through that expected resistance area. We got the pullback, and off that high, let me go back to my weekly here real quickly. The weekly doesn't have enough resolution, but when we get to the daily, that's when we said we have our first bearish clue up here, a potential bearish divergence compared to the previous highs. We saw the agreement on the 4-hour, and so we're getting this pullback now into this morning. So let's look at the pullback here on the daily, go up to the new candle. I do not see any type of divergence down here. All I see is the obvious observation that we pulled back, and we're holding right now at the 38% retracement, which once again is that swing high from last week, right? So that 46.25, they might have probed a few points below, but essentially we just bounced right off that. So don't really see a nice bullish divergence on the daily. That doesn't have to be there to see some kind of follow through, but I don't see it so far. On the 4-hour, I cleaned this up a little bit. I made the boxes kind of clear, so it's not really, I thought it looked a little messy when everything was completely shaded in. And you can see again from this perspective of these areas of structure, again these areas of chop and all that, we just rejected from the top end of that box. So if we do end up finding support this morning and the bulls rip, let's just say they hold from 46 here from that swing high of last week, and they start ripping, we're going to push up, and I would expect there to be some resistance somewhere up around 46. Let's just say this range from about 46.60 to about 46.80 up in there. That to me would be the next expected resistance. You just have to keep in mind that there is this little area right here, right around 46.06, and I think we have an eye level up there. Let me go up to 46.0575. So pretty much the eye level exactly would be the next area of expected resistance on the attempt to go ahead and push up to the next chop block up top from 46.80 to 47.40. So keep in mind that stuff up above. On the 4-hour, we do have a potential bullish divergence on this pullback. I'm not going to read too much into that right now just because I need to see other time frames agreeing. But we do see the potential bullish signal on the 4-hour right now from our expected support level. So we'll see if we get follow through from there. And let's see, as far as levels go here, on the pullback, remember what I told you, if we get back through 46.25 highs and we break down back into the previous weekly range, we are back into a major chop area. This has been major chop for an entire week straight. And then if we go all the way back to the zones we kind of made our eye levels off of back here, as you can see, this whole area in this right here is just a lot of back and forth, balance going on. So if we do pull back and we get through that, it's going to be hard for me to pinpoint the best levels just because there are so many different support and resistances in here, and it's quite messy. But we do have the general retracement scheme, and let me just make sure this is 42.1275, and then the actual high, let me just make sure I have everything set, 45.86. So, I don't know. We just probed into the 38 retrace. Remember, we just talked about that. We held the 38 retrace of the small leg right there and bounced, and that was the low of yesterday. And then we could not get follow through, and they rolled over and actually came down, and now they just bounced off the 38 retrace of the entire leg. So the entire area of price action. Again, I don't think it's coincidence. I do think that for whatever reason, these fib ratios have some type of effect because I see, specific legs that I mark, and it might be some random area in the chart, and it comes down and bounces right off of it, even though there's really nothing that sticks out to me on the left-hand side of the chart here at all, really. So if they do pull back deeper and they break that, we have the general retracements. The 50% retracement of the leg happens to be, let's just say, 4,400. It's just about 4,400, and that major swing low when we pull back and bounce is 43.9550. So somewhere right around 43.95 to just about 4,400 here wouldn't be a surprising area, even if they bounce out over here and it takes time and they eventually pull back into that area. Wouldn't be too surprising to see some type of reaction again, just because there's a lot of demand right there and that really strong bounce out, right? So I made the argument that this right here, or actually this right here, this swing low right here, might be why we come down and bounce out again like that. So the same thing right here, it's the same argument. If they do pull back into there, might be another bounce. The final thing that I think stands out to me is the fact that the 61.8 retrace of the whole leg happens to be this lower box. So the top end of the lower box, and if you look at these two swing highs here back from January 28th, I think, 27th, the overnight highs there where the market rejected and pulled back, that is the 61.8 to the tick basically. So those highs 55.75, 56 quarter, and the 61.8 is 55 quarter. So right in that area, and I'll go ahead and just kind of shade this, would be the next level that makes sense to me. Now keep in mind, within this area, and we're going to go to the short time frames here to look, there are a whole bunch of levels in here. And each, as you guys have seen, each level is just as strong as the other. So we're going to go down and take a look at those levels now. So let's go to the 60 minute and take a look at what we're pulling back into here. So again, there's a possibility they just hold right now from the low we made in the overnight session and get a bounce out, because I do see, again, potential 4-hour bullishness. Now I'm seeing the 60 minute showing basically the same thing. So if we don't break the overnight low, this could be an attempt to launch out. Just keep in mind, we're in a downtrend. If you zoom way out, you know, it's a major downtrend. Interestingly enough, we just rejected right around that 75% retrace level. So 61.8's here, 75 is pretty much the high of what we just made. So we've retraced the previous leg down by 75% and rejected. So we're still technically in the bearish trend. So they might end up finding resistance off the back end of one of these levels we have marked for continuation lower. So we want to keep that in mind. But below us here, for potential support, just like the 38% retracement of the smaller leg held basically to the tick, we could potentially see that down here at 25.50, which is that level I marked down here on the short time frame chart, down at 25.50 here. So we want to be aware of that if it pulls back. Potential support just because the fib is sitting right there. And then a little bit deeper than that, it's going to bring us right into 15 quarter and 43.98 again. And then there's one thing that's sticking out here. This swing high at 43.8050. So I don't know if we have an eye level down there. 43.8050. There you go. So we have our eye level sitting there. So at least it's marked, and we'll be aware of it as we approach. That 86.50 to me looks like a nice naked swing high that never was tested. So again, very well could come right into it, maybe break it a little bit and test into it and bounce. So I'm watching that. And then again, we've got the eye level. So each one is just as valid as the next. And then you can see right off of 24.50 here, huge impulsive move right off of there for this continuation upward. In fact, that pullback was a nice little 50% retrace of that leg. So we got this push up, a pullback, and literally the 50 retrace almost to the tick was the 24.50 level. And they bounced out of there again. Very impulsive move. So again, coming into there, could see some buyers still rip that guy up. So keep in mind those levels. And then we want to look at what we have above us if they do start to bounce up. So if this market starts to try to follow through with this bullish signal we're seeing from the CP, we're going to want to be aware of what we're pushing up into. So let's just kind of zoom out here and take a look at the bigger picture. We've come up and tested basically this ledge right here. So all of the support in the market right around here is where the market came up and tested and failed at 44.82, right? So the KP that ended up being a support area back on February 1st is now acting as a resistance area here. So if we can get through there, what are we looking at pushing up into? 96.75 to me is the next area that makes the most sense. And we might want to take a look at the fib for this most recent sell-off. So basically our overnight fib. And you can see the 61.8 essentially is right up into that 96 area. And the 50% I guess has already been tested. So this 96 area, let's say 93 to 96, might be an interesting level to watch this morning if it pushes up into there. Again, assuming we can get through the highs of this bounce that we got in the overnight. So if we can get through there, we've got up into 96, 93 there, and the CP is, we basically have this range from the CP to the eye level. It just is what it is right there. And then a little bit further than that, we're going to go right into our orange line. You guys know how well that works. In fact, I think, Scott, you got the biggest trade of the day yesterday, shorting that level and getting that 20, 30 point correction. So that orange line is sitting right there. And again, right into that swing low at 45.0275. So there's another little potential area right there. Again, it just is what it is, a whole bunch of crap that we're going to push up into there. And assuming we can get through all that stuff and get through the overnight high, we're then going up to contend with, to me, what looks like this right here. This little area where we bounced really strong from, and then when we came back up into it, we rejected multiple times and continued to sell off. There could be some more sellers up there when we get up there. And then it's just, I guess, one by one to get through that high we made just a few days ago. That was the major bearish divergence, the multiple time frame bearish signal. So we have to get through that before we're really confident in any type of bullish move. Of course, we need to keep in mind, we did hold the 38% retrace, right? So even though we're in a downtrend, the bullish argument for today is the fact that we did hold the highs of previous week, and we're holding pretty much exactly the 38% retracement of this leg. So that would be the argument for the bulls, that, you know, the first thing we need to see though is a break above that high we made just a few days ago. And then on the way there, we have some lines in the sand. We have the orange line again, and it happens to 50% of the previous day happens to be basically in that general area. So that's our first line in the sand. If we get through there, there might be a little bit more of a clue that the bulls are going to regain strength. Remember, anything's possible. They could push up through there and fail, but that would be that first clue. And then getting through 27, the overnight high, and then getting through the previous daily high at 48. These are levels that will be kind of check marks for the confirmation of a bullish reversal. Of course, the final one will be the break of that high at 86. So I think that's what we have for this morning. We're going to jump down to the short time frames here and see if we can't get some more trades coming into the open. And like I said, right now there is a decent bullish divergence from the overnight low. So your guess is as good as mine as to whether or not it's actually going to follow through and get through some of these areas that we have shaded above us. If we can't get through those areas, then it's more than likely that we're going to come down and test those deeper levels that we talked about. So have a great day and a great weekend.